Alright, so good evening everyone. Stock Master back here again with another video for you guys. And today we're going to be talking about steps to become a stock millionaire. Okay, so these are beginner's tips. And I believe that this content is important for my page because the name of the page is Stock Master for Beginner. Right? So my goal is to educate you guys on how to make money for yourself, how to do your own research, and to not make the same mistake I made when I started investing. So these are stuff that I learned along the way. Watch the video and then try to finish the whole video because these tips are important, okay? At the same time, remember to subscribe, like, and share. Leave a comment down below after the video, and let's get to it. So, steps to become a stock millionaire. Beginner's tip. All right, so let's start with a quote today, right? So, Ron Swanson, a great man, once said, "Give a man a fish, feed him for a day. Don't teach a man to fish, and feed yourself. He's a grown man, and fishing is not that hard." So it's just a joke. If you know the TV show, leave it down in the comment. What TV show is Ron Swanson from? And of course, at the same time, the quote of the day is, if you heard the old saying already, give a man a fish, feed him for the day, teach him how to fish, he can feed himself for life. So that's my point, my goal, right? My goal is to teach you guys how to invest, um, and to grow your portfolio and reach financial freedom, financial independence. That's what we all want. Of course, a lot of people that are into stock, that's what they want. So that's my goal, okay? So focus on hot stocks. So of course you could focus on current trend stocks, stock trend, right? So when I first started, I focused on a lot of stocks that were in the talks, right? So let's say Amazon, Google, they were still small. Um, Amazon, Google, and of course right now EV, right? So let's say the trend right now, 2021, cannabis. With the new administration coming in for the U.S., the Democrats, cannabis could boom this year. It's 2021, okay? EV boom in 2020, and it's currently growing still. Penny stocks. So you already know how penny stocks are. They're always hot. They're good for short sales, good and quick profits, and SPACs, right? So special purpose acquisition companies. These are companies that are blank check company, and they're they come out and their purpose is to invest in to buy a company out. So these are good little companies that have a lot of potential, right? So make sure that you do your DD on your SPACs. Of course, small market cap companies, right? So these are companies that are under a billion, there's even under half a million, a half a billion. Uh, that's a small market cap, and that means that they have a lot of potential to grow. You want to get them before they're in the billions or trillions, right? So step two, credible and high growth stocks. So you can do the penny stock route and short sell. That's good, but high risk. Let's call it high risk, high reward, right? So the old saying. But of course, high high risk, high reward, high loss. So there's a potential of losing money too. Huge market cap, right? So when you look at curve growth stock, you look at huge market cap, and what does that mean? Huge market caps are um are stocks or are companies that consistently create revenue no matter how the market is. And an example could be MAGA, right? And first time I heard about MAGA, I thought of Make America Great Again. Nope, I was actually wrong. So a lot of you guys are new to this. MAGA is the three biggest company right now. First one is Microsoft, M, right? Second one, Amazon. The third one, Google, and the last one, Apple. So these are examples of stocks that are high growth, and they'll consistently grow through the year. If you're holding them long term, it's great. If you're holding them short term, within 6 months you can make a decent profit already because these are companies that are consistently growing. Of course, there's more company that could be mentioned. I didn't put on the list, but like Tesla, Netflix, all these other companies. Okay, so let's go to the next one. I found this chart and I thought it's important to put it into this PowerPoint presentation because a lot of you guys are new and you guys don't know any of this, right? So liquidity is how easily you can get into it and out of stock. With no liquidity, no trade volume, you can't sell your stock. Nobody's buying the stock. So even if you buy at low price and nobody's buying, and then you want to sell at a high price, right? Nobody's buying it. You can't sell your stock. Trading volume. Trading volume is the number of shares being traded each day, a factor that has huge implications for stock liquidity. So if there's a high volume, that means a lot of selling is happening, a lot of buying is happening at the same time, which is good for the stock. A lot of movement. That means that the stock is on the market. It's still hot. Everyone's talking about it, and people are investing, selling, and so on, going long. You're betting that the company's stock will increase in price so that you can buy low and sell high, right? And we're gonna talk more about buy low and sell high in a bit. But investing. The thing about investing is that the stock is volatile. So what does volatility mean? That means that it's so volatile, right? It goes up, it goes down, goes up, it goes down, it goes up, it goes down, and it keeps going down, it keeps going up, right? So going long, averaging down. This is the important part, okay? This is when the investor buys more stock as the price goes down. This results in a decrease on the average price at which the investor purchased the stock. So you might have heard a lot of people on YouTube that do stock analysis talking about averaging down, averaging down. You guys like what? A lot of you guys don't know, right? It's basically, let's say that I invested in, let's say, Facebook, for example, right? Facebook, and I believe in Facebook. I believe that Facebook is I'm gonna hold it for 10 years. Well, when the let's say Facebook's sitting at example $200, right? It drops to 150. I buy more stock. I don't sell my share. I buy more stock, so I average down my cost basis, my total cost basis. All right. All right. So the next term is buy low, sell high. A lot of people still follow this method. It's a good method that I follow myself for my penny stocks and for some of my other plays that I hold for about 2, 3 months to 6 months. So example, you could buy a share for a total of $100, right? And you sell it at $1,000, $900 profit. And of course, a lot of people are saying, why don't you just hold it for long term and never sell it because of tax, right? But the thing is that even if your profit get taxed, what does that mean? Profit is profit. I could make 100,000, 30,000 go to tax. It's just an example, right? And I still have $70,000 profit, right? I'm $70,000 richer than I was yesterday. That's how I kind of look at it. A lot of people are saying, "Well, I'm gonna get taxed," stuff like that. Nah, you gotta think about profit is profit, and of course, do not need to buy at bottom with all of your stocks. So a lot of stocks you don't need to buy at the bottom. A lot of people might be like, "Well, I want to wait until it bottoms out." Well, you might miss the train. For example, let's say that you let's say your friend bought the stock at this price, right? And you heard about it at this price. It's a little higher than before, but let's say the support is here, right? Now, you can buy it and you can ride it up. You still make profit. You could go halfway if you're here and still be higher than when your friend bought it, but you still made some profit, okay? So profit is profit. That's one rule of thumb to remember as a beginner investor. And of course, cut your losses. So for me, I learned this the hard way. I kept some of my plays for too long and lost too much money, right? So you can put a stop loss on your stop trailing loss on your stock. So when you go to trade, there's an option, right? Put a stop trailing loss, and that means that if your stock go down the share you're holding goes down 5% or 10%, right? Depending on you, all your stocks get sold off, sell off. So that's a good thing, okay? Of course, do not lose more money because of your ego and pride, right? And the ego and the pride is that, oh, I'll just hold it. It'll it'll come back up. It'll come back up. It'll come back up. And let's say that it's a losing play. It never comes back up. But on the other hand, I want to speak about the other side, right? Because I'm both sides. I have plays that I still hold nowadays, even at a loss, because I believe in the long-term investment that it will grow over the year. I believe in the company. I believe in the mission. I look at the financial analysis, and I believe everything about the company that they will grow. So that's another thing. Okay, cut your loss, but don't cut your loss if you believe in the company and you believe that it will grow. At the same time, if you cut your loss, you can put the money into a different play that could grow your money faster. And of course, move on. Don't dwell on it too much. A lot of people they get scared once they lose some money and they take all their money out and they're like, I don't want to do this anymore. I lost $300, right? And I'll give you an example in a bit. Failing is part of the process, right? Learn from it. You can learn from, maybe I didn't do enough research. And not every play or every position, stock position, right, is gonna be a winning play. That's just the thing. You're gonna have winners, you're gonna have losers, and you're gonna have to learn from it. All right, so diversification is key, right? It's a must. A lot of people are saying, the other side, they say, well, don't diversify too much. Don't diversify at all. Just have one stock, 100% of your portfolio, and if that stock goes up, then you profit, right? Of course, my rule of thumb is that never have one stock as your whole portfolio. An example could be right. Let's say that I own, let's say I own my whole portfolio is Facebook. The price, the stock drops in price, my whole portfolio value drops. Let's say I have 500,000 worth of Facebook, and now it's at 250,000. I just lost $250,000, right? On the other hand, if that stock does really well, let's say that it goes to 1 million and I invested 500,000, my portfolio value increases. But with that, it's a lot of speculations, and then if it does bad, your whole portfolio does bad, and that what's called your, of course, your drive, your ego, your motivation within investing will drop because I've seen it before. It happens. It hasn't happened to me because right when I started diversifying my investment and so on. Is there such a thing as over diversification? Right? Yes, there is. And what's the reason for that? Okay, so for me, I believe that you have to do constant DD on your stock, follow the news, right? And let's say you own over 100, even 100, 100 is a lot. Let's say you own over 100 stocks. Um, can you keep up with it on a daily basis, reading everything, doing research constantly on those 100 stocks? Because you want to have winners, right? And you want to get out of losers. So to find out whether the losing plays or winning plays, you have to do research on every stock. So for me myself, I don't really have more than uh I've been doing this for a while, so I have, let's say, 15 overall, right? Stocks that I look into on a daily, or 25. But even 25 is a lot. So when you first start, I recommend, I have friends that just started investing. I recommend them looking into 5 to 10, starting at 5, uh, get consistent with doing research and so on. Learn how to research, because once you get used to researching, it's easier to do over time. So for now, I could look at one stock in about 10 to 15 minutes and move on to the next one. Of course, and that's the reason why diversification is good, but too much is not good. So too much of anything is not good. All right. So one of the reasons why diversification is key is that I'll show you an example of one of my smaller portfolio, right? So here's the thing. I have a play, right? A company that I'm investing in right now, and I'm down $748. That's a lot of money. But my overall profit for my portfolio, right? I actually made profit. Okay, my overall value of portfolio, I actually made profit, $355 profit no matter what. Why is that? Because I have other plays that are doing better, right? And these three plays are what's called balance out this negative 748, and then I made profit on top of that. Of course, I believe that next 748 is gonna increase, so I'm holding it. At the same time, this is why you diversify. Okay. All right. So the key thing is that when I started this, I had a methodology or a plan, right? And my plan was to invest in credible company, like MAGA, right, that we just mentioned earlier, and Microsoft, Apple, and Tesla. Like when Tesla was booming, I started investing heavily in Tesla because I believe in credible stocks, and I believe that some of these stocks will grow consistently, right? But of course, over time when I started learning more, I have gone to penny stock. I have gone to more speculative plays, smaller cap companies that I believe that have big growth potential. But you always have to follow your plan. If you don't follow your plan, you can mess up along the road and you might regret it. So follow your agenda. Of course, can you change your investment methodology? Yes, but with research, right? Don't follow the hype blindly. So I see a lot of people on Facebook, social media, everywhere. They hear about a stock, let's say a penny stock. They hear about a penny stock, and they're like, "Oh man, everyone's talking about this. I'm just gonna invest into it." What? But let's say that they invest into it and the penny stock drops. They're following the hype blindly. They didn't do their research. So always do your research and then change your investment methodology um through your journey. Of course, make adjustments, but always remember to the method that have worked for you. So for me myself, I believe that blue chip company or a high growth company is a must to have in my portfolio because that's my methodology, my plan. Right? I always remember that that's how I made the most. I made my money when I first started. So always follow your plan, even if you're changing it along the way or adding onto it along the way. All right. Of course, this is the most important slide of this whole PowerPoint. Do your DD. All right. So when I first started investing, a lot of people, I'll make a post on, let's say, Facebook or social media, right? or on YouTube, and a lot of people are like, do your DD, do your DD, and I'm like, what is DD? Triple D, double D? I don't even know what DD is, but DD stands for due diligence. Okay, so what is due diligence? Investigate, research, research the stock, look at the market. What's the current trend? Is the stock you're looking at the current trend, or is it a long-term hold? All right, so there's a lot of stuff. Look at the financial side. Look at the qualitative side. Qualitative data, quantitative data, so on. Research before buying. Don't just buy a stock because you want to put your money somewhere. You want to put your money into a winning play. That's how you become a stock millionaire. And of course, ensure that you have done enough research to know this is a winning play. Okay, potential. Make sure that it has a lot of potential. Study. Always study. So this is like going back to school, right? Studying. You want to be the best at what you do, right? And to be the best in stocks, you have to study the market daily. And that's what I do. I look at the market daily. I look at stocks daily. I follow my current the current positions I hold. I follow the news of every stock daily, and this is important. Okay, so if you have stayed with me this far, thank you. Um, this is a quick video, and like I said, like, share, subscribe. Leave a comment down below if you're a new investor and enjoyed this through this presentation. Let me know if you want more content like this. What stocks are you guys currently holding? Let's discuss, right? Throw it into the comments. I love discussing stocks. Is there any other content that you would like me to provide on this channel? So I'm doing my penny stock every weekend. And of course, I'm doing other daily stock analysis. And this is another thing, right? Educating new investors or investors in general how to invest smart. And of course, that's it from my PowerPoint presentation. So leave a like, share, and subscribe, and I'll see you guys in the next video. Good luck, traders.